time we need to go to stock picks. Shalk Louw, you're going with Naspers.
There we go. I'm in the big cannon. We're sitting with the just before Christmas. I mean, last year this time around, I mean, I looked at Naspers as well. I mean, not having a super year. I mean, China not having a super year, and ended up being a great company until I think it was about May, October-ish. October-ish, doing really well since the 6th of October. Which, funny enough, which is the same time where they did the share split. And funny enough, when a company do a share split, they usually want to make the company more liquid and more tradable, and usually it's got a positive effect. But this just did not have the effect that they wanted, because since the 6th of October, this company has now retraced 20%. And why it's also looking really interesting, when you look at this company since May this year, and you compare it to Process actually outperformed Naspers, and they're very similar. I know people say, one is more South African. It's pretty much just still comes down and boils down to 10 cent. When you look at the two, Process has outperformed Naspers by 13.5% since May. And I think that's now given us an opportunity, not only in terms of an oversold scenario where Naspers is now currently trading, but also relative against Process. So if you own Process and you like being a little bit more active, it might be worth having a look at switching some of those Process to Naspers now.
Yeah, and it has been quite wild watching the, as you say, the share price depreciation after the split, because usually that's good for a share, but well, apparently not always. Alex, you're going with Karooooo with all the O's.
Yes, at the moment, obviously very bullish on SA Inc., but I think when you do get opportunity to buy a quality rand hedge, you need to do so. So Karooooo, in our view, will continue to deliver good results. Before the last set of results were also actually in line with our expectations, but the share price has gone down from around 1,000 and sometimes even breaches 800 at the moment, right? So it's down quite a lot. We think that's a good entry point. This business generates phenomenal cash earnings, as well as very good high return metrics. So it deserves its premium rating. And we think that rating will not only be maintained, but probably grow over time as they continue to gain scale. And they've got years of runway, specifically in Asia, that they can do. So we like it a lot for a long-term play.
Yeah, and all these vehicle sales that we're seeing can only be helping, because a lot of those cars, most of them, are going to get one or another different tracker put into it. That's all for Stockwatch today. Thanks to our guests, Shalk Louw, PSG Wealth Old Oak, going with Naspers, Alex Duys and Umthombo Wealth going with Karooooo. Up next, the close.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.